Hey everyone, welcome back to the 1% channel. In today's video, we'll be covering the top 3 stocks of April 2021. Before we get started, I would appreciate it if you could like the video and subscribe to the channel with notifications turned on so you don't miss out on any new videos. Okay, so without further delay, let's get straight into our top 3 stocks of the week. Alright, coming in at the number 3 spot, we have Zillow, ticker symbol Z. Zillow was a pioneer in digital real estate long before the pandemic, but there's no denying that last year helped raise the company's profile. Many investors may still associate Zillow with its pioneering home value estimates website, which derived the majority of its revenue from real estate-related advertising. In recent years, however, the company has evolved and now handles digitally enabled real estate transactions and adjacent services. Its technology and app-based services are well-positioned for the future evolution of home buying and selling. Zillow's inventory of homes for sale slumped during the height of the pandemic, but has rebounded remarkably in recent months. Despite the negative effect of the pandemic, Zillow grew revenue by 22%, but that doesn't tell the entire story. The company's core internet, media, and technology segment, which still generates the majority of its revenue, was hardest hit, growing just 14% year over year. At the same time, its home segments grew revenue by 26%, while its nascent mortgages segment climbed 73%. It's these newer, high-growth businesses that should have investors most excited. Zillow's adjusted EBITDA grew to an all-time high last year, which bodes well for the company's future profitability. Zillow was in ARK Invest shopping carts again last week, as ARK Next Generation Internet and ARK Innovation were both scooping up shares. The online realtor now represents 2.36% and 3.46% of the fund's holdings, respectively, and is a top 10 holding in both funds. Alright, coming in at the number 2 spot, we have DocuSign, ticker symbol DOCU. DocuSign is the world's #1 e-signature solutions company with over 892,000 clients across various industries in over 180 countries. Over the past years, its revenue increased by 49% from 2019 to $1.5 billion. The company plays a huge role in simplifying paperwork, allowing customers to authorize contractual obligations instantly. It should be no surprise that the company's clientele has been growing at a rate of 42% year over year since 2013. The service has a net retention rate of 123%, meaning revenue from existing users is piling up with each year that passes. DocuSign is also looking to expand its solutions to cover contract risk analysis, lifecycle management, and online notarization as well, with its profits nearly quadrupling to $215 million last year. This is definitely one hot tech stock you don't want to miss. It expects to take its sales further to $1.97 billion by the end of the year. A 28% growth rate seems a little low considering its stock is trading at 26 times revenue. However, I think the company may be a little pessimistic with its guidance, as the company's e-sign services have a lot of growth potential on the international level and is highly scalable. I'd definitely grab some shares before its next earnings session around June. Okay, finally coming in at the #1 spot, we have Sea Limited, ticker symbol SE. As a holdings company, Sea Limited is simultaneously an e-commerce retailer, video game publisher, and financial services company. It currently holds the most market share in e-commerce in Southeast Asia with its subsidiary Shopee. Shopee is an online shopping platform similar to Amazon. In fourth quarter 2020, Shopee's revenue increased by 178.3% to $842.2 million. During that time, the company's Battle Royale-style game, Free Fire, became most downloaded game in the world. Its multiplayer gaming platform, Garena, also saw its quarterly active users increase by 72% year over year to $610.6 million. Overall bookings in this video game segment more than doubled annually to $1 billion. There are also now more than 23.2 million users utilizing Sea Money for payment solutions. Roughly half of these users are from Indonesia. Despite its high growth rate in adding its customer base and sales, Sea Limited's net loss accelerated to $524.6 million from $281.9 million in 2019. However, many investors believe in the potential of Sea Limited stock. Through equity offerings, the company's cash balance actually increased from $3.19 billion in 2019 to $6.17 billion in 2020. With a rapid expansion rate and solid capitalization, Sea Limited is still a worthy e-commerce stock. This year, the company expects it can continue its momentum by growing its revenue to $9 billion. For these reasons, I believe paying a premium of 25 times sales for the stock is well justified. Alright, well that's a wrap for today's top 3 stocks to buy video. If you guys enjoyed, please make sure to like the video, subscribe to the channel with notifications turned on so you don't miss out on any new videos. And finally, please feel free to comment what you guys think of my stock picks and videos. So any advice will be highly appreciated. Thank you so much for watching and have an amazing rest of your day. Peace!